Hello everyone, welcome to the market snapshot for today. So the markets have been really good, especially the US markets. Like I said on last Friday, somehow the problem which US market was facing, it would have basically a good to decent week, and then a major sell-off would happen on the Fridays, and that continued for almost 4 to 6 weeks, I guess. But last week, if you would have watched my video, the closing was very strong, and the result is throughout this week the numbers in the US markets have been amazing. I mean, it's a very strong market, to be precise. Indian markets, there are a lot of pockets of strength, but if we look at major indexes, we don't see much happening. uh, I mean, if you can scout for sectors, I think that is where the strength lies, majorly into defensive or large cap companies for both the markets, Indian market and the US markets. As of today, Nifty 50 trades at 24,395, Nifty 500 23,58. No movements there, almost like where it is. The good part is it is almost at Nifty 500 is almost at its all-time high, and Nifty 50 is still trailing maybe by 5-7%. Nasdaq very strong, looking at 30, just crossed over 30,000. And today's, I mean, if at all Nasdaq can hold today's level, you can expect that. I am assuming that next week, it can just break out it to its highest zone. S&P 500, the strongest looking chart across everything which I look at, and very strong looking chart, very good numbers to support the rise. Basically, US market is looking very strong at this point of time. If you can handle volatility, you can definitely get in by 100% exposure, but if you cannot, look for at around 50 to 75%. This is Nifty 500. The advances were 231 to declines of 269. New highs 8 to new lows of 492. Like, that is what I am saying. I mean, new highs are not getting formed in the market. Somehow, the kind of momentum trust is needed is not coming, and that is the reason, it's a very good market if you can scout it, but uh, like, it's not that it's a complete bull run wherein anything and everything you buy it will definitely work out. The breadth, I think, yeah, very consistent, neither losing neither gaining. Above 20 EMA 265, above 50 EMA 288, above 200 EMA 299. And this is Nifty 50. Again, a strong looking chart. Whatever gain it had made, I think almost 50% has already given back. But no signs of worry. I mean, I think this might just pull off. Uh, Overall, the structure is good, but like I said, the strength are in pockets, and that is where your scouting is needed. Nifty 500, very strong looking chart, trading at its almost all-time high, and a breakout will just, I mean, take it to the blue zone territory. And the overall sentiments from the Indian market, Nifty 50 is bullish, participation is mixed and breadth is strong. Nifty 500 bullish, participation is mixed and breadth is mixed too. So for me, I think at this point of time, the most tradable index in the Indian market context is Nifty 500. The reason being, the strength is not into one particular sector. Like I have been saying, and there is a lot of strength going on in the healthcares, consumer durables. IT is regaining momentum. Auto is doing phenomenally well. So the strength is scattered, and that is the reason, Nifty 500 makes much more sense. And that is where my bet would be for the Indian markets. Coming to the US market, this is S&P 500. Advances 320 to declines of 180, new highs 27 to new lows of 473. And breadth, the most amazing part, this just keeps getting better every day. Above 20 EMA 344 stocks, above 50 EMA 345 stocks, and above 200 EMA 362 stocks. So very strong, very consistent numbers for the US. For S&P 500, I think a lot of momentum has been gained by Nasdaq 100 and Russell 2000 as well. Looking at the charts, I mean, this is Nasdaq 100, very strong looking chart, very good numbers to support the rise. So this is not in the air kind of a rise. This momentum which Nasdaq has gained has got a lot of liquidity moving in, and that is the reason for sure you can look for good opportunities in Nasdaq 100. I think just look at any chart in the universe and in Nasdaq universe, and you will feel like they are just looking the exact replica of each other. Very, very strong looking chart and very, very good numbers too. This is the strongest bet at S&P 500. It's just imagine this was the breakout it gave, and now it is trying to form a flag at. I mean, if this works out, just imagine like this will. I mean, the kind of momentum it will gain, and I don't see much reasons of this breakout not happening because literally the numbers have been very, very consistent. Russell 2000, yeah, try to replicate what was happening in Nasdaq 100 or S&P 500, but for sure the strength is not as good as it is in Nasdaq 100 or S&P 500. So overall for the US market, the Nasdaq 100 looks bullish. Participation is strong, breadth is strong, very, very strong territory. S&P 500 bullish, participation is strong, breadth is strong, the best looking to me. Russell 2000 bullish, participation is mixed, and breadth is a strong. So from my side, I think you can look for bets in S&P 500 and Nasdaq 100. I think for sure the market is calling in for 100% exposure. The only cost at which it comes is it will come at volatility. Be rest assured. And why? If everything is supportive, the rise is supportive, the chart looks good, the numbers are looking good, why then the volatility? The volatility comes because of these factors. The US yields somehow they subdued a bit, but then they are not falling, so everything cannot be rising. This is the simple thesis because of which I feel the volatility will be there in the equities. Dollar at 99.91, it has been falling, but we want it to fall further. Although it has weakened, it might fall further as well. But then at this point of time, while we talk on 14th of August, I would say the rising yields and little bit of fall in the dollar more is, well, I mean, that is what is causing the volatility in the market. VIX at 14.63, I don't say they tell you the exact sentiments of the market. BTC is getting accumulated, and gold is one of the strongest bets at this point of time. So dollar, like I said, it is falling, but we want it to fall further. That is what will help to the rise of equities. Somehow this has definitely helped to the rise of equities. Bitcoin is getting accumulated. I have no idea if it is getting accumulated for a breakout or breakdown, but then definitely it should be in your watch list. And here it is, the strongest looking chart, I would say. Gold is has gained momentum. It is coming back, coming down. I would say buy the dips. I mean, mark your levels and look for opportunities. Uh, if you're trading gold, well and good, but then for sure this is something which you even can look for swing or positional basis, very, very good opportunities. So overall market sentiments are looking good. It is just that there will be volatility because of the rising yields and dollar. So I would say, see, if you are someone who can handle volatility, just go all in for both the markets. But in case you are still new, I mean, and volatility is something which troubles you, I would say stick on to an exposure of around 50 to 75%. That will be helpful to you because see, the problem with the markets these days is they are rising also in full swing, and when they fall they literally don't give you an inch to escape. So that is the reason I would say, uh, if you are a new entrant, have an exposure of around 50 to 75%. If you know how to deal with volatility, you know how to place your stop losses and really execute them as and when required, I think 100% exposure is well and good for both the markets. Bitcoin should be in your watch list, and gold should be in your trade list, swing list, positional list, everything. That's everything from my side. I hope you all found this useful. Thank you so much and see you next time. Have a good one.